here. We are back at the PDAC 2020 and very happy to have Jeffrey Christian of the CPM Group again, same as last year. Thank you so much for being on the segment.
It's always a pleasure to be with you.
Yeah, interesting times, eh?
Yeah, very interesting times. Yeah.
So let's start off. I mean, you and the CPM Group, what are your thoughts on the base of precious metals over the last year here? You know, it was stable up until 4 days ago. But, what's your thoughts?
Well, it's very interesting. I mean, in 2019, second half of 2019, we saw gold and silver prices start to rise.
Yeah.
And to be fair, they rose to the top of the levels that this sort of trading range they've been in since 2015.
Right.
But they were rising in an absence of physical demand from investors. They were rising due to futures and forwards and options and ETF buying from shorter term investors, and those long term investors who buy physical metal were pretty much out of the market, or in fact some of them were selling as the price rose. Mm-hmm. And that's a very interesting thing for us because it's that physical demand that really drives prices sharply higher. And if the prices start rising sharply in late 2019, early 2020, in an absence of that investment demand, when those investors come back as buyers, we expect the price to be that much stronger.
Mm-hmm. So what are some key takeaway in addition to that it's just a futures market driving it? Are you just saying that it's pretty much just speculation, it's not really fundamentals? Like, what is it then?
It's shorter term investment and speculation.
Okay.
And we did a study in 2018, 2019 of institutional investor involvement in gold and silver futures and forwards. Mm-hmm. And what we found was that the vast majority of institutional investors who get involved in futures and forwards trading don't trade metals.
Interesting.
And of the less than 1% of commodity trading advisors, commodity pool operators, hedge fund managers in the best list around, of the 6,800, 135 invested and traded in precious metals. And of those, 132 or something? 32 traded based on fundamentals and economics, and the rest were technical, or they were having a computer generate buy and sell signals.
Interesting.
And that's true across financial markets.
Okay.
So one of the things that we're seeing, not just in futures and forwards, but in physical metal and in stocks, is a major transformation in the way investors, especially institutional investors, but also private individual investors, trade and invest. And that's having major changes and consequences for precious metals, stocks, currencies, and everything else.
So what is your thoughts and explanation on this last week, where we saw a big correction in gold and silver tracing down on downward pressure? I mean, what are your thoughts?
First off, gold went up $120 in 5 days.
Right.
Then it came down $100 in 5 days. So, gold and silver rose as the stock market started declining based on concerns of the economic consequences of the coronavirus.
Correct, yeah.
People had sort of downplayed it up until last week. And then last week they started saying, no, this is really going to have a major problem. The global supply chain across industries, et cetera, et cetera.
Yeah.
So they ran into gold and silver, they ran out of stocks and bonds. Bond yields fell, bond prices rose, stock prices fell, gold and silver rose. And then early in the week, really it was Monday already, people in the precious metal side said, well, maybe this isn't so good. Mm-hmm. And you always have some people who will liquidate their gold and silver positions because they need the collateral to cover their long positions in the stocks when stocks fall.
Yeah.
So a lot of times when you see stocks fall, you'll see precious metals fall too, because people are turning to them for liquidity.
Interesting.
So one of the things that we saw last week, I think, at the decline in prices was, first off, a movement away. Okay, this is probably too soon. $120 in 5 days. Let me take some profits here. The second thing was a move for liquidity. Let me liquidate some of my precious metals because I need to cover my stocks and bond positions.
Mm-hmm. Interesting. Okay. So what are central banks still buying gold or not? Are you seeing China, Poland, or anybody? Yeah. I mean, are you still seeing that like we did last year?
Central banks report with a lag, so we have no idea what they were doing.
And what is that lag?
It's a month or two.
Month or two,
yeah.
okay.
So, we see what they were doing in December, and as of December, they were still buying. And you've seen several things. I mean, first off, okay, Russia's been buying. A couple other countries have been buying for political reasons. And then you have a couple dozen mining countries. The central banks have been buying gold just to diversify their portfolio. They were taking advantage of the lower prices.
Right.
When the prices rose, and if you look at gold, people talk about the strength of gold prices in the second half of the year. I did.
Yeah.
If you look at it, the price rose in July and August, and then it fell back.
Right.
And it didn't start rising again until December.
Right.
And if you look at what central banks did, when the price of gold rose in July and August, they pulled back from their purchases.
Right, yeah.
When the price fell back, they started buying again. So
Interesting.
central banks are buying, most of them for portfolio diversification purposes, a couple because of political issues, which we can talk about, and we assume that they're continuing to.
Yeah. And were these increased purchases, or was it just kind of just maintaining that balance?
No, it's an increase. Basically, central banks around the world have 62%, collectively, the average, the total foreign monetary reserve assets of central banks, 62% of it's in the US dollar.
Wow. Okay.
And then the next biggest chunk is the euro, and then everything else is very small. And so central banks are trying to diversify away from the dollar and to some extent diversify away from the euro. And that's what they're doing. And in some countries, you'll see, for example, China a lot of times won't sell any dollars, but as they have money coming in through their net trade positive balance, they'll take some of that inflow and buy gold and other currencies with it. Other central banks are selling some of their dollars and euros down and putting that money.
Are you seeing hedge positions in a lot of the mid-tiers?
You're
and
seeing
the
some companies start hedging.
Oh, really?
And I have to say, there's a you may know I play music, and there was an old blues musician, Sonny Boy Williamson.
Yeah.
And in the 1960s, the British were really thrilled with black blues players, and all these black blues players who couldn't find an audience in America were invited over to England. And the London Times interviewed Sonny Boy Williamson and said, "Why are you here? What do you make of this?" He said, "Well, these British boys want to play the blues so bad, and they do."
Yeah.
Now, I think that's sort of the same way with mining hedging.
Yeah.
They want to hedge so bad, and they do.
Yeah.
So we've seen some mining companies hedging, and quite frankly, they're doing a very bad job of it.
And why?
They're selling forward in fixed it. So they're giving away the upside. In some cases, they're buying options and paying premium for it. They're not preserving the upside for themselves and their shareholders. They are locking in a floor price, which is good.
Yeah.
But they're really giving away way too much.
And how long are these contracts usually?
Usually they're 1 to 3 years.
Longer than before, shorter than before?
About the same.
About the same. Okay.
Yeah. I mean, back in the glory days of the late 80s and early 90s, you had some companies that went out 10 years.
Yeah.
That doesn't happen anymore.
Very interesting. And what are your quick thoughts on the M&A activity of the last couple of years?
I'm a critic of it because I think that a lot of these companies that have money should be either dividending some or they should be looking to...
You are seeing some of that, though.
Yeah, you are. You are seeing some reforms.
Very few majors are doing dividends and hiking from 20 to 40% within one fiscal year. They're already doing that.
Yeah.
So I think there's demand for that. But what are some other critics, or what are some?
But the other thing is you should be focusing on your costs.
Oh yes.
Don't because, and I'm giving 2 speeches here related to a study that we did on institutional investor trends in junior mining.
Structural transformation of mining exploration finance, and the second one is institutional investment in the Canadian exploration industry.
Exactly.
Okay.
And what you're finding is that a lot of investors say, no, we really want you to focus on being a low-cost producer and being a profitable producer and dividending out and being organically profitable. And you can't buy, one of the things that I'm talking about here is, if I'm a large institutional investor, BlackRock's the biggest, they got $7 trillion under management. The rubric is I want 2% of my portfolio in an industry for it to be meaningful. 2% of 7 trillion, do the math.
Yeah.
It's 140 billion.
Yeah.
Right? That's the market cap of the top 25
Right.
mining companies in the world.
Well, they can't put a position.
You can
Yeah.
buy,
Yeah.
and actually the top 25 asset management companies
Yeah.
are in the same position. If
Yeah.
they want to have 2%, they have to buy 20% of everything
Right.
in the top 12 mining companies, and
Yeah.
they still don't get there.
Yeah. Well, hence that's why,
Yeah.
like you've probably seen a lot of these M&As to create that market
But
cap
you see,
that's
it's
attractive.
misplaced because you can merge the entire industry and not make
And
that
not
2%
make- yeah,
2%.
right.
What you need to do is pay attention to the reality that the mining industry, and especially the gold mining industry, is small relative to the investment market.
Correct.
And what you need to do is focus on being an attractive company to smaller funds, independent funds, individual investors.
Mm-hmm.
And this has been the case for 150 years.
Right.
The gold mining industry has always been too small for big asset management
Right.
companies, insurance companies, and
Yeah.
such. They've always found their money from smaller investors who want to invest in well-run, intelligently run, profitable mining companies.
Yeah.
And if that's what you create, you'll get all the finance you need. And if you try to build yourself into a big enough company to attract the biggest guys, you'll never get there because your industry is too small.
Right. Right. Interesting. Okay, so for 2020, are you a bull or bear for the precious metal space and the base metal space? What are Are you bull or bear case for each?
I am a bull for gold, and silver, and platinum.
Okay.
A modest bull for 2020, a much bigger bull for the next 5 to 10 years. I think that gold, silver, and platinum all will rise sharply at some point, but probably not in 2020. But I do think they will rise over the course of this year for a variety of reasons. Palladium, I think, is kind of topping out. Rhodium is kind of topping out, but
We've seen
there's
them
some
have such a great run. Unbelievable.
fundamentals there that are going to keep them high.
Right.
Base metals is much more of a rifle approach. So I like copper, I like zinc, I like nickel,
Yeah.
but I'm not necessarily enthusiastic about others. And they're obviously much more tuned into what's happening with world industrial production.
Right.
And that's coming down as it was.
Yeah.
And the coronavirus is hitting it harder.
Yeah.
So I think that you're going to see
Inventory is building up.
you're going to see weakness at least in the first half. You might start to see some recovery in the second half, but I'm not convinced.
Yeah. So if you want to find out more about the CPM Group and Jeffrey Christian, you can go to cpmgroup.com and you can read all about their annual metals books on precious metal side and the base metals and anything else that they do. Thank you so much, Jeffrey. Appreciate it.
Good.
Cheers.
I'll see you.
Have a good one. Cheers.
Sorry, I forgot you're Canadian.
Yeah. No worries. Okay, so where are you off now? You got to do those speeches, eh?
Yeah, I got a speech
Yeah, you're at one.
at 1, so
Are you going to be putting this on these two speeches on a website or something, or a transcript or anything, or
I guess I should. Yeah.
like do they record it?
I don't know if they record them or not.
Oh, okay.
I think they do.
Because I was going to include it in the description here.
I'm not sure